3, 2, 1.
All right. Are we up?
We are up.
It was take 23.
It's taken a few times to get this podcast rolling today. Yeah. But we got it rolling.
It's one of those days.
Yeah, it is, man. But that's all right.
One of those days on the market. It's one of those days in the podcast studio.
Tell us what's going on, though.
Dude.
I'm excited about it. Are we going to talk about the market today?
A little bit.
All right.
I mean, what time is it? 2:30. Market's almost closed. It's Friday afternoon. It was a rough morning. It's coming back a little bit. We'll see. It's we're pretty deep into the worst 6 months, for stocks and seasonally anyway. And we had a pretty good melt up in June so far. So do we have a little pullback here? I mean, a lot of people, some of the rabbit holes I go down on YouTube, there's some very smart, both macroeconomic guys and technical analysts that are looking at some things that are like so far diverged. There's somebody has an indicator for a black swan risk event indicator, and there's a series of things that you put together, and if this diverges too far from that, then the odds of a black swan event go up by some second or third derivative or whatever. It gets to be insane.
Wow.
But so there are people out there right now going, the worst thing you could do is be in the market when it gaps down 20%, like an 87 kind of crash, right? 20% in basically 2 days. So nobody wants that. But as long as the market keeps going higher, it keeps going higher. If you
it goes up till it doesn't.
Right. And so this is one of the things I'm talking about this weekend. It's either the newsletter, I think. I put out a couple weeks ago in the newsletter, Larry Williams. If you go to YouTube and you look up Larry Williams, we've talked about him on the podcast before, but he's a forecaster and he does cycles, right? His stuff is really good. And he came out on June 6th with his latest short-term update. Mm-hmm. And he's looking for a pullback, correction, whatever. He doesn't focus on the magnitude of it. He focuses on the timing. And he said from June to July, we should have some kind of pullback. And that was June 6th. So if you had sold on June 6th, I don't have that particular chart up here, but if you had sold on June 6th, you would have missed a pretty big run-up in the past 2 weeks. Mm. Now, the last couple of days were off, but still, even if you sold today, you're still up relative to June 6th. So, I mean, I really like the seasonality and cycles and all that is a great baseline, but price has to be 80%. Like you can form your bias. So basically, the way I look at it is if I'm going into a seasonally bad period and I'm in the stock funds, then I'm gonna cut my losses really short. Like I'm not gonna give the market a whole bunch of room. If it looks like it's going down, I'm getting out, right? On the other hand, if you're going into a seasonally strong period,
you might give it another day.
You might give it another day.
Yeah. And that's the best you can do.
Yeah. Yeah. So, all right. We're actually going to flip to some world view of things. Talk about global central banks this week. Was it last week or this week that our Fed met? I guess it was last week, I think.
I think it was last week.
Yeah. So
they're all running by so fast.
Yeah, no, I know. So a bunch of central banks met this week, and almost all of them raised rates. But we're gonna look at global central banks a little bit, and then of course, why would central banks around the world raise rates? Because inflation around the world is going higher, and some of it is unbelievable, which we'll get to. And then sector rotation, I'm gonna touch on that a little bit. The dollar again, because it's really important. And Tesla. Somebody last night, we did the members-only webinar last night, and somebody asked for like an update to, I think we did Tesla as a bonus chart last week, and they were asking about kind of an update to that. So this is going to be that. And then the TSP Weekly Fund Charts. All right. So in the past week-ish, because the U.S. was last week, but we paused our interest rate hiking cycle, right? And then central bank, the Fed comes out and says, okay, we're not going to raise or lower rates in June, but we expect 2 more interest rate hikes by the end of the year. Virtually every other country in the G20, among others, raised rates in the past week. So Australia's up 1/4 point, Great Britain's up 0.5 point, Canada's up 1/4 point, Czech Republic went up 1.25% in one move. Denmark's up, European Union, Norway, Switzerland. Turkey went up 6.5% in one move. They're now at 15%. I mean, it costs 15% to borrow money in Turkey right now, and it's for a good reason. And so, and all this comes from, this is the link if you want to go to it, it's global-rates.com. So why would central banks coordinated around the world raise interest rates at the same time and so much? It's global inflation, right? So I got the site in the footnote on the next slide, but trading economics. The most interesting thing here is our friends in China and Russia have about the lowest inflation rate in the world right now, which I was amazed. This is as of May, right, 2023. China and Russia have basically the lowest inflation rates in the world. And if we go back to China, actually reduced their rates by 1/10. When everybody else in the rest of the world is raising rates, China is reducing theirs. So you got to wonder whose economy is better. It's kind of unbelievable. And the other part of that, of course, is Russia. How are you supposedly getting crushed in a war? All kinds of sanctions on you, and your inflation rate is about the lowest in the world. It's stunning. I don't really have an answer to that question because it boggles my mind just thinking about it. But here we are down here at 4%. We came down a little bit from 4.9. That's great. We're trying to get down to 2%, right? The Fed keeps saying that our target is 2%. And I guess we're going to keep raising rates until we get there, but we have a long way to go. But this is the G20, and it's about the first half of it or so. So here are the rest of them. Turkey is 40% year-over-year inflation right now. Argentina is 114%. I mean, how do you live with year-over-year inflation at 100%? Everything that you bought last year is twice as much this year. It's insane. And here's the link if you guys want to kind of dig more into it, but kind of unbelievable. So it certainly looks like rates are going to keep going higher. How that affects the market at this point, who knows? It's one Fed meeting, market rallies, next Fed meeting, it tanks. It's like very hard to try to figure out how the market's going to respond to the Fed, let alone what the Fed's going to do. But yeah, I just thought that was worth kind of throwing out there. So sector rotation, we've talked about before. Last time we kind of talked about it, it was actually a bullish way of looking at it because while tech and consumer discretionary were down the last time we looked at it, some of these other sectors that had been doing really bad up till now were actually green. But today, basically everything is red. So it's not really sector rotation, it's money coming out, completely coming out, which is, what makes the market fall. Sector rotation would be a good thing because then, if Amazon and Apple and those guys kind of start taking a break, some of the other sectors can backfill and the overall index can keep moving higher. But if all the sectors are going down, the index is going down.
That's the whole, pretty much the whole market, right?
That's the S&P.
Yeah.
That's the C fund. Yeah.
So, yeah, we talked a lot about sector rotation over the last, I don't know, it's been weeks.
Yeah, because it's the only way, and we'll get to it on the S fund, but the only way this rally in general keeps going is if breadth broadens, is what they call it. More stocks have to participate in it rather than just these NVIDIA Apple, Google, Facebook, like the big mega cap tech companies can lead us somewhere, but they eventually they can't be the only ones.
Right. Everybody else has got to be kicking in too. Sector rotation definitely isn't always a bad thing. We don't get to take advantage of it in the TSP. Right. Either the C fund's going up or it's not. Now, outside of that, if you're able to do this in your IRA or your brokerage account or whatever, you can get an ETF that just tracks the sector. Yep. And so if you can track the sector that's going up, you're going to beat the S&P 500 by
for sure
a significant amount. Yeah, wish we could do that.
Wish we could in TSP. All right. The dollar versus the C fund. So I know we've looked at this chart before, but I usually do it with respect to the I fund. But since the C fund is a broader index and it's what we track more, I just wanted to do it on the C fund. So the dollar is in candlesticks and the C fund is in orange. Okay. So it's not day for day, but it's pretty clear when the dollar goes up, the C fund goes down. When the dollar goes down, the C fund goes up, right? It's a really clear over time inverse correlation. And so we had a low in the dollar back in February, had 2 tests of it, and now we have a higher low, right? And a big breakout in the dollar on Friday. So if the dollar continues higher, the C fund goes down. And basically we have just about a buy trigger. If you're looking at the stack, you got price of the dollar just about breaking out above that 20-day moving average line. Right there at 50, but moving higher, and MACD is about to turn positive. So we don't have buy trigger just yet, but one more day of the dollar moving higher, and we have a buy trigger on the dollar, which will not be good for the C fund. Okay, Tesla. So last week we looked at Tesla. It was a longer term chart. It was the Elliott wave pattern of it. We did regular nominal price and log scale. And this time I just kind of wanted to zoom in a little bit and go back to Tesla's last top, this is actually a 3-wave. Because this is going to be a 4-wave and a 5-wave. That's what we were talking about last week in the Elliott wave view of it. So if you zoom in to the 4-wave that we're in right now, and you say, okay, I understand in the big scheme of things that we think Tesla's going to go higher, but how else can you look at it? Since the top of the wave 3 back here in November 2021, every time we had a correction, we had a rally off that correction that was the same length as this black line, right? We had a rally here, rally there, right? They're all the same. That black line, it's called a measured move, okay? So if every time we put in a bottom and we move back up to the top of that, like that distance, when we go forward, we have a bottom here in Tesla, and we came up and we hit that line, we should expect some kind of pullback there in Tesla. We're also way overbought on RSI. And so, I mean, who knows how much the pullback will be, but I would expect we get some kind of pullback in Tesla here. I mean, if it's going to continue higher, so if the longer term pattern, if this is actually a 3, this is the bottom of the 4, and we're continuing higher, can we get a pullback, get support from that high and keep going? Yeah, it could be something like that. But in the very short term, we definitely, if you were short term trading Tesla, you're looking to take profits there. Definitely with the MACD looking like that and RSI looking like this. So hopefully, I mean, this is the exact same things you would do on TSP. It's just applied to a stock that a lot of people trade. So that's the update for Tesla. All right, TSP fund charts. So we do the weekly charts. Like I said, I put these together at, 11 maybe on Friday morning. So it's not exactly the close for the week, but it's on a weekly basis, it's not going to be that much different. So on a weekly basis, we had 5 consecutive up weeks for the C fund. I mean, that's really good, right? We don't have, let's see, 1, 2, 3, 4, 5. This is back here when we're still in the bull market in 21. We had 5 weeks up in a row. And then other than that, we haven't had, let's see, 1, 2, 3, 4, 5. We had 5 weeks up in a row here. So it doesn't happen very often, but we had 5 weeks up in a row here. We had a little consolidation and then another 5 weeks up. So it's been a pretty strong rally, certainly since March of this year. And so to have a pullback on a weekly basis that doesn't get above last week's high, but also doesn't get below last week's low, it's not a big deal on a weekly basis. The problem with this is we are so overextended from the 20-week moving average line that if you use this stack on a weekly basis to make reallocation decisions, you're waiting until price gets down here and crosses that line, and RSI gets below 50 and MACD turns negative. So your risk is significant, right? I mean, from basically 4,400 to 4,200, that's a pretty big percentage risk, which is why, in the member group, we use the daily charts instead of the weekly charts. But if you're only looking at TSP on a weekly basis, you just have to acknowledge at this point that your risk is pretty significant before you make a reallocation decision. Or you can get out if you think that the market's going to keep going lower, and then get back in if you get support there. So it just, again, as we always say, it depends on your personal circumstances and risk tolerance. S fund. So we were talking about breadth, and the S fund S fund is the bottom 4,500 companies traded in the U.S. The C fund is the biggest 500 companies. So obviously, if the S&P is moving higher and the S fund is not, it means that the big cap companies in the S&P are pulling those 500 companies up higher, but the underlying companies are not moving. And so we really, really wanted to see the S fund get above this high. The C fund is already above its August high. Like this, the C fund has been doing like this. The S fund is still, it looked like it was going to start to come along. But this is not great. We get a pretty big move down in RSI, and we haven't gotten anywhere close to overbought. MACD is kind of flat right now. It doesn't really matter. But what we really wanted to see, is the S fund get above that high, and I'm not so sure we're going to see it. So we had talked about left shoulder, head, right shoulder, neckline, and we got a breakout off the neckline, right? It looked really good. If we come back down here, we could test the neckline again and then move higher, but we could also break the neckline and move much lower. So this early in the breakout off of support, this is a pretty big down week. Doesn't exude confidence. iFund, it's hanging in there, but MACD doesn't look good. RSI doesn't look good. Never got to overbought. We're still above that 20-week moving average line. So, until price breaks below there, in this case, your risk isn't that bad, because here's where price is and here's where the line is. So if you wanted to hold off and wait, if you own the iFund and you wanted to hold off and wait to sell it, your risk is only that much compared to the C fund, where your risk is much more. So it's just part of the decision-making process. And the F fund, I don't know what's going on with the F fund. We've got 4 weeks of flat, basically no movement. RSI is literally flat, and nothing happening on MACD. So, can I show it on this chart? Yeah, this is basically 1, 2, 3, 4, 5 is what we're looking at for an Elliott wave count if it plays out that way. So my primary count, my expectation is that the F fund goes down from here. And as rates continue to go up, the price of bonds goes down when the rates go up. So as rates continue higher, bonds should continue lower, and the F fund should have another leg down. But right now it's flat. It's got to break one way or the other. All right. I feel like that was kind of a quick show.
We went to it pretty quick. But it's a lot of good stuff, though. If you have any questions, shoot them in the comment section where we found the video. If you don't have a comment section, you can always send us an email at support@growmytsp.com. Yeah, man, sometimes you're just rolling through it.
Yeah.
You know?
I didn't know what else to say there on those. And we had so many takes of it first.
Yeah, we had a few glitches in the podcast world, but that's all right. We got through it. But if you guys have any questions, we love getting questions. We love getting comments because it gives us stuff to talk about on the shows. Yeah. So feel free to shoot us something, and maybe it gives us a topic we can work on for the show.
Yeah, that'd be great.
If you guys like what you see, please share it with your friends. If you don't like it, share it anyway.
Right.
All right, guys. You hopefully will have a great week, and we will see you next week.
Later here.
Ooh, that's kind of loud.